In this third and final video, I'll be going through an example of how to calculate the extent to which Social Security benefits may be taxable. And this problem is one of your assigned problems in Chapter 3, and it relates to the end of chapter problem number 42, although I've already altered some of the data of this problem. So if you want to follow along at the end of the chapter for problem number 42, it's on page 3-37. So they give us information about Social Security benefits that Sean, who is single, received dividend income of $13,000, interest income of $2,000, and then it talks a little bit about the fact that he's considering selling the stock, and the question is how should he handle the fact that he might get a $10,000 gain, because this $10,000 immediate gain, if he sells all the stock right now, might elevate his provisional income such that he may now have some of his Social Security benefits taxable. So, for example, if a retired person who holds some stock is considering liquidating some of those assets, they may be well advised to possibly spread the sale of those stocks, for example, out over a number of years so as not to elevate the provisional taxable income or modified adjusted gross income above a threshold which would qualify his Social Security benefits as being taxable. And so we've got to really be careful there. So let's punch in some of the data then from this problem. I've got Social Security benefits received of $8,500 in using my data, dividend income of $13,000, and the interest income, of $2,000. So the provisional income then is, well, we're going to take half of the Social Security benefits, and then we're going to add half the Social Security of $8,500, and we're also going to add back in the dividend income, and we're going to also add in the interest income. And so we've just calculated, as I went through earlier, the provisional income. So now we have Sean's provisional income of $19,250. All right, so now the question is, given his provisional income of $19,250, are his Social Security benefits taxable? Well, if we go back to the table in the chapter, you can see that this $19,250 falls below, provisional income falls below the lower end of the threshold for single taxpayers. And therefore, Sean does not have to pay any tax on his Social Security benefits. And by the way, if you're interested in the page number for determining whether or not this provisional income falls below the threshold, it's on page 3-12, and you'll see on page 312 that for a single individual, the lower limit of provisional income is $25,000, and his provisional income falls below that. So because his provisional income falls below the lower limit, none of his Social Security benefits are taxable. Now let's assume he sells the stock under the second scenario, which I've set up. Again, $8,500 in Social Security benefits. Here, though, we have a capital gain on the sale of the stock using my numbers of $10,000. Again, add back in we have $13,000 dividend income and interest income of $2,000. Well, this has elevated his provisional income to $29,250 now, because he sold the stock, all the stock, and earned a capital gain of 10 grand. Well, now that means that because he's elevated his provisional income above the $25,000 lower limit threshold, then some of his Social Security benefits is going to be subject to taxation. So now let's just calculate then the Social Security benefits for Sean that are subject to taxation. And the calculation for this then is that we're going to take, and I'm just going to make this a little bit more visible here. And my formula that I set up is exactly what you see in the text. It's the exact same formula as that on page 3-12. So because Sean's provisional income falls in between $25,000 and $34,000, then he is only going to be subject to some taxation of his Social Security benefits. And so the calculation then is we're going to take Sean's provisional income and we're going to deduct the $25,000 lower limit threshold, and we're going to multiply that by 50%. So we're going to take half of the difference between his provisional income and the lower limit of $25,000. And this is all prescribed on page 3-12. And then we're going to compare that to 50% of his Social Security benefits and take the lesser of the two. So for whether it be $4,250 of Social Security benefits versus the $2,125, which is half of the difference between $29,250 and $25,000. And so then his Social Security benefits that are subject to taxation amount to $2,125.
So in this case, I would advise Sean not to sell all of the stock at once and therefore elevate his provisional income above the lower limit threshold. I would recommend that he split the sale of those stocks into 2 years so that he keeps his provisional income below the threshold of $25,000, and therefore none of his Social Security benefits would be taxable.